Hello and welcome to Business Today Television. I'm Sakshi Batra and this is Market Today. Before we begin today's show on the stock market cues and how should you be trading in today's trading session, it is important to pay a tribute to Dr. Manmohan Singh, India's 14th Prime Minister, considered the architect of the economic reforms in the country, as he passed away on Thursday night in New Delhi as he was 92 years old. The national mourning of 7 days will be declared today and the cabinet is set to meet at 11 a.m. today. The last rites will also be conducted with full state honors. The flag will also be hoisted at half-mast today. Prime Minister Narendra Modi also has paid a heartfelt tribute to former Prime Minister Dr. Manmohan Singh, describing him as one of India's most distinguished leaders whose legacy will endure in the nation's history. Dr. Manmohan Singh, India's two-time Prime Minister during 2004 to 2014, was born on September 26th of 1932. The politician, the economist, the academician and the bureaucrat who also served as the governor of the Reserve Bank of India from 1982 to 1985. He was the Minister of Finance in P.V. Narasimha Rao's government as well. He was one of those responsible for the economic liberation of India in 1991. He is a renowned economist credited for introducing sweeping reforms in the 1990s. Remember Manrega of 2005? That was introduced by Prime Minister Manmohan Singh to provide for the enhancement of livelihood, security of households in the rural areas of the country. Dr. Manmohan Singh's government passed the Right to Information Act in 2005, again a remarkable reform. The US-India Civil Nuclear Agreement was also signed by Dr. Singh and former US President George W. Bush. He was definitely a towering figure in India's public life. His remarkable journey from humble beginnings to shaping the nation's economic and political landscape will be remembered for generations to come. As they say, the show must go on, and so shall we. We will talk about throughout the course of today and for many other days to come, and keep remembering his contributions to India and Indian economy. But we begin our stock market show right now. Remember, today is also the day the January FNO series is all set to begin with today's trading session. The Nifty has already declined by 10% over the last three series, marking the biggest drop since June of 2022. The December contract was also action-packed with bulls dominating the first half and bears taking control in the latter. Ultimately, the bears prevailed as the series has ended with a 0.6% decline. On the monthly expiry day, we saw that markets remained subdued, ending largely unchanged in a range-bound trading session. And this also marks the first time in 21 months that the market has posted losses for 3 consecutive series. We've been seeing persistent FII sell-off, rising bond yields, stronger dollar index that continues to dampen the investor sentiment right here. What we've also seen is that overnight, the Dow Jones has also closed about 0.07% higher in trade. S&P dipped by 0.04% and the Nasdaq Composite fell less than 0.1% in trade. So mixed close for the overnight cues from the US. Stocks in Asia advanced in early trade on Friday as the markets in the region opened after 2 days of Christmas break, followed by a muted close on Wall Street. So Japan's Nikkei was up about 0.7% in trade. We've seen Australia's ASX 200 was up by 33 odd points or just 0.4%. Japanese yen, meanwhile, dropped to a 5-month low of 158 per dollar in the previous session after the Bank of Japan governor said the economy would move closer to sustainably achieving the central bank's inflation target next year as well. Like I said, overseas investors have continued to remain net sellers. This is for the 8th consecutive session as of yesterday that we've seen the FIIs offload stocks worth about 2,376 odd crores. Domestic institutional investors have stayed net buyers for the 7th trading session, and we've seen that they have bought stocks approximately 3,336 crore rupees as on Thursday as well. The gift Nifty trends are now indicative of a positive start, but we'll have to see how it opens up. 255 points of a decline. 23,495 is the current level at which you are seeing the Nifty open at. So sharp declines, and now 398. There is a sharp volatility right in the pre-open tick that we are seeing in the markets right now. We will try and see how the other important factors are moving and how the heavyweight counters are moving as well. Stocks like Reliance Industries, HDFC Bank, the IT stocks, we will see how all of them are opening up. Right now, there's a 1.7% decline on the Nifty alone. 23,360 is what it is getting indicative of opening, but we'll see how it progresses. This should improve for the better right now. Remember, the heavyweight counters have largely remained, on the back foot when it comes to providing support to the markets in the last series. Stocks like Reliance Industries, which has been, this entire year, 2024, has been a rare occasion when we've seen negative returns for Reliance Industries. Let's see how that one is opening in the first day of January series. Remember, this series as well also has a history of negative returns. In the last 5 years, we've actually seen the Nifty give negative returns in January series. You're already seeing HDFC Bank indicate a negative start. ICICI Bank could be opening absolutely flat in trade, about 0.8% of a fall for HDFC Bank. Yes, flattish to a positive bias for ICICI Bank. Let's look at Reliance Industries, and let's look at the IT heavyweight pack as well. SBI about 0.4%. Remember, PSU banks have been trying to make a comeback, and that's how it is opening at this point in time. Infosys about 0.3% lower, so the IT stocks could again be lying low again. Let's also look at TCS. That's indicative of a 1% downtick start. We also have a whole host of stocks that you could look at which are in news. So let's look at Jubilant Foodworks. It signed an MOU with Coca-Cola for beverage products. That could work well for the company. Dhani Services, there's a board meeting on December 31st. There could be an approval of, so Jubilant Foods is opening about 2% higher in the pre-open trade. Dhani Services, there's a board meeting on January 31st. The stock is opening about 1% higher. This is for fundraise for projects for the company's upcoming real estate development projects, and therefore you could be seeing a positive uptick. Lemon Tree Hotels could be in focus. There is a signing of license agreement for a hotel in Maharashtra. Again, a 1.3% of a positive uptick is what we could see. Power Mech Projects has secured a 186 crores order for maintenance services. That stock could also be in focus and could be showing a positive start. Yes, a 4.6% uptick is expected. Keep an eye out on the Nifty. It's flattened out now, 23,753. Remember the kind of fall that we were indicative of, 350 points odd or so. That's largely improved. So keep an eye. There's been a lot of volatility right at the pre-opening levels. Nazara Tech, keep an eye out on that. That's acquired a 10.2% stake in Absolute Sports, so we'll keep an eye out on that too. Dixon Tech will be in focus. Dixon Electro Manufacturing has signed an MOU with Celecor for refrigerators right there. Another 1% higher. Azad Engineering could be in focus. A fundraise could be considered in the board meeting. Ircon International could be in focus. The execution of MOUs for outsourcing of maintenance work could be seen, worth about 89 odd crore rupees. So that could again keep the focus back on the railway stocks like Ircon. 1.3% high is what it is indicative of. Remember, yesterday in the latter half, Adani Group stocks shot up pretty sharply. Adani Enterprises could be in focus again in trade today. It's acquired a 26% stake in GPCPL right there. Okay, let's welcome our guest on the show. We have Kunal V. Parar, Vice President Technical Research at Choice Equity Broking, is now with us. Kunal, warm welcome. Good morning to you. Do tell us how are you really looking at the market setup right now, the first day of the January series? And like I was mentioning, last 5 years, we've actually seen the series give negative returns. And even if we extend the data, last 10 years, it's been only 3 years in the last 10 years when we have seen positive returns for January. What is your expectation? We've already seen 3 consecutive series of losses for the Nifty. Kunal, could you unmute yourself, please? We can't hear you.
Definitely, since last 3 months, we have been witnessing some bearish momentum, and it may further fall from the present level. If you talk about the monthly chart, the way Nifty has been trading, the way Nifty has given a breakout of its 50 days moving average. Not only this, Nifty has given a breakout of its upward rising trend line. I think further pain would be there, but obviously, FII is on holiday mode. So, but obviously, we have been continuously witnessing selling pressure from the FII side. No doubt, DI is also DI is also putting their efforts to bring the market at comfortable level, but I don't think so that Nifty will recover soon. Right now, Nifty is trading at 23,782. It has been trading in a sideways momentum since last 3 to 4 days. If we talk about the range wise, downside strong support comes at 23,500. Upper side resistance comes at 24,100. So I think between this range, Nifty will play its game. And for fresh breakout, Nifty has to sustain about 24,100, and only we will be able to see the 24,800 and more above it. So right now, no doubt, we have been seeing some downside pressure, but further downside would be there if Nifty breaks 23,500.
Okay, got that, Kunal. As far as the markets are concerned, let us also look at a few other stocks. I wanted to also reiterate for our viewers the brokerage houses updates today. Remember, on Home First Finance, there's a report from Motilal Oswal Financial Services. This is a buy rating with a target price of 1250. Motilal Oswal believes that ability to penetrate deeper into existing states and improve the LAP proportion can definitely leverage to achieve higher desired spreads for the company. There's also an expectation within the next 1 or 2 years there could be potentially a first new age affordable housing finance company, purely professionally managed company in the way of Home First Finance. It's indicative of a positive start, 1.2% higher at 1015 odd levels. On the defense sector, there's an antique report, and the report says that the recent correction has provided meaningful opportunity to accumulate defense stocks. They've remained bullish. Their top picks are HAL, BEL, BDL, Mazagon Dock and PTC Industries. So that's the kind of bullishness that they are displaying on defense sector. On the auto space, DAM Capital has come out with a report. They have upgraded Tata Motors to buy from neutral. Their target price is at 870. They have upgraded Escorts to buy from neutral. Their target price is 3550. They have upgraded Bajaj Auto from sell to buy now with a target price of 9,750. Their topics are M&M, TVS Motors and RK Forging in the auto space. Apart from this, Motilal Oswal has also come out with a report on JSW Infra, buy rating and a target price of 375. They believe volume growth trajectory is remaining strong, and there is also a focus on ramping up capacity, and the stock could be opening up positive, already an indication coming in. Let's come back to Kunal. Kunal, I'll ask you on the defense sector first, where brokerage houses are now penciling in higher targets and probably a good enough time after the recent correction to get into these. We're also seeing some of the stocks really in focus. So Mazagon Dock again will turn X-split today. That will be in focus. Pre-positioning in the defense space is happening because of the upcoming budget. Your own approach on the defense space and top stocks that you're looking at. So there you have it, viewers. You can actually see the indicative price in the pre-open is now getting that pre-split. Remember, the split price will be there. Don't think that this is a fall right there. So those who have the existing shares in their account still today, they will get the benefit of the split shares. Kunal.
Well, definitely. Actually, since the last 2 to 3 weeks, we have been maintaining our view, particularly on the defense counters, to accumulate these stocks.
Yeah.
No doubt, in this year, we have witnessed somewhere around 30 to 40% correction from its all-time high. But as budget, we are approaching to budget days. I think government may announce some making means government may focus particularly on the export related defense part and all. So I think one can accumulate HAL, BEL, BEML and Mazgao Dock coaching shipyards, because this all this if you talk about technically, this all the stocks have been trading with a strong support, have taken the support on a weekly chart of its previous bottom as well, and they have recently come out of its congestion formation on a smaller time frame. So definitely we may see some upside momentum in these counters, and this is a perfect time where one can accumulate these stocks for longer term perspective, because I think we have recently started defense export in a mass level, and I think if government is going to put more pressure on this part, then further export increase will be there. So please accumulate the stocks. First target is HL right now. If you talk about HL is trading somewhere around 4,240. No doubt it's a below its 200 days moving average, but downside strong support comes at somewhere around 3,970. One can get into the stock at present level with strict SL somewhere around 3950. If you talk about Mazega Dow, then the way stock has been trading at 23,075 level, it has been trading above its 50 days moving average. I think further upside momentum would be there from the present level with strict stop loss somewhere around 2200. Upside 2600 would be there, and if it breaks, then 2800 would be there, and even one can accumulate BEL and BEML as well. So these are the four stocks in which I am seeing some spark momentum in upcoming trading session.
Okay, got that. So that's as far as the defense stocks are concerned. Remember, the markets have settled at 23,801 in the pre-open trade, 51 points higher. There is an indication that most of the sectors could be opening higher, with autos taking the lead. Again, remember, yesterday it was the latter half. It was the autos that were driving in the faster lane. Again, an opening at around 0.3% higher for trade today. FMCG, even the broader markets could be opening higher. Banks could be opening higher. Pharma, metals, PSU banks could be in action, but the real estate stocks could be opening flat with a negative bias. Tata Motors is indicative of a positive start at over 1% of an uptick. Adani Enterprises and the entire space could be in focus yet again. ITC and Bajaj Finserv are some of the other pockets that could be in focus. One other pocket that I want all of you to keep an eye out on is the cement space. Let's look at two stocks right there. Ultratech Cement. Let's look at that one. Remember, there is a lot of buzz happening in the cement space, a lot of mergers, acquisitions taking place. Ultratech is now indicative of a 0.3% start. The company is going to be acquiring 8.69% stake in Star Cement for 851 odd crore rupees. That's the news that's come in. So Star Cement will also be in focus right there. 4.3% higher is getting indication of an opening higher because of this acquisition news. 240 rupees currently for Star Cement. So all the large caps are keeping an eye out on the mid and the small cap companies in the cement space to be able to create greater capacities with the competition rising now in the cement space and newer incumbents coming in and focusing on the cement pack. This is what is really taking place. Over the last few odd months, you've actually seen a lot of mergers and acquisitions take place, and this is likely to continue going forward. Kunal, coming to you. Cement space, how are you looking at the mid and the large cap space here?
Well, if you talk about cement, soft and Ultratech Cement, Grasim, Ambuja, ACC, all are looking at a very good level. Particularly, if you talk about, let's talk about particularly Ultratech, because news is there. The stock has been trading above its 200 days moving average, and trend is up. Trending fall in the counter in the Ultratech Cement up to the level of 11,000. I think it would become a good buying opportunity. Not only this, one can get into the stock at present level as well. Upper side, we can see first target somewhere around 12,000, and if stock breaks this 12,000, then more upside would be there up to the level of 13,400, while downside strong support comes at 10,500. So nothing to worry about this counter because stock has been trading in an uptrend trajectory only. Now, if you talk about Ambuja Cement, ACC, even these stocks looks very attractive, particularly on daily chart. The way stock has been trading since last 4 to 5 days. I think any fall in the counter up to the level of 525 to 500, it would become a good buying opportunity. No doubt we have seen a higher volatility because of some Adani related news, but nothing to worry about this ACC and Ambuja counters. One can get into the stock at present level up to the level of 525 with strict stop loss somewhere around 475. Upper side first target would be at 605, and if Ambuja Cement breaks this 605, then further upside would be there up to the level of 700. So this is in favor of creating a long position in Ambuja Cement.
Okay, got that. So that's the view coming in. Remember, the cement space will be in focus because of newer acquisitions taking place. Finally, Ultratech Star Cement deal is done, and Ultratech Cement will be acquiring 8.7% stake in Star Cement. That's been announced right there, and this is already keeping the entire space afloat. 9:15, we have the opening ticks, 23,832. 70 points higher for the Nifty. That's how it is opening. All the sectors open into the green. That's a positive. Half a percent uptick on the auto space. That's driving in the fast lane. Bank, the Nifty Bank is opening about 0.4% higher. It's substantially improved from yesterday's losses. Broader markets also indicative of a positive start. Small caps up by 0.4% as well. Top movers on the Nifty are Tata Motors up 1%, NTPC up 0.6%. You have IndusInd Bank, Adani Enterprises as some of the top movers right there. Within the F&O space, there is Dixon Technologies that is further ticking higher. Remember, I had shared this news that Dixon Electro Manufacturing has signed an MOU with Celicor for refrigerators right there, and therefore you see a strong move. Jubilant Foods is also among the top movers in the F&O space. Another news that I had shared with you is that the MOU has been signed with Coca-Cola for beverages. Hoodco is going to be in focus, and Escorts Kubota also among the top movers within the F&O space right there. The PSE space is also up and about 0.2% higher. NTPC, Concor, IRFC, IOC, PFC, these are the stocks within the PSU basket that are buzzing in trade. Consumer durables is further picking action. Of course, a large part of it is also because Dixon is moving up 2.7% higher. You also have Blue Star, Crompton Greaves, Voltas, all of these stocks now buzzing in trade. Within the auto space now, Bajaj Auto is further pulling up higher. Remember, the upgraded target came in from DAM Capital with a target price of 9750, and that target has been achieved for Bajaj Auto from DAM Capital. You can see a 2% uptick coming in on Bajaj Auto right now. Tata Motors is also inching higher in trade. What is not contributing to the gains? Apollo Hospitals, Dr. Reddy's, Titan, BEL, Britannia. These are the top laggards in this trade right now. But if we look at the other top gainers within the banking space, you have ICICI Bank that's contributing with over 1% gains, 1310 right now from the heavyweights. IndusInd Bank I've shared 0.6% higher. So that's the banking counters. You can also see Bajaj Finance up and about half odd percent. Kotak Mahindra Bank up 0.3% odd in trade as well. PNB is up and about 0.6% higher within the PSU space. So that's also buzzing in trade. Let's look at the broader markets to see what the action is sharing with us in terms of key stocks. Rolla Tainers after a long haul 4% higher within the broader markets. You also have stocks like GMR Power, that's up at 5%. Star Cement we've already shared is 5% higher. Gala Precision Engineering is another 5.5% higher in trade right now. Those are some of the stocks that are buzzing in the broader markets. On the Nifty Next 50 list, you have Adani Group stocks, some of them that are buzzing. Adani Total Gas is up and about. You have Zomato that's ticking higher now, about 0.7% higher. Tata Power, DLF, Cholamandalam Investment, various sectors and key stocks from them that are pulling up the markets higher. But all the sectors are up and about. Let's get back to Kunal to see where exactly is he spotting the initial action at and where should you keep your focus. Kunal, opening on a positive zone, 23,800 and beyond that. Do you expect the momentum to sustain, and where would you keep your attention in the opening?
Well, definitely Nifty is trading at 23,800, but as we said, 24,100 would be the resistance level, while downside 23,500 may act as a good support. So I think means we have to wait unless and until Nifty breaks this support area and resistance level. Let's say if Nifty breaks this 24,100, then further upside would be there up to the level of 24,800. So if so means traders should take an advantage of this range bound momentum. Now, if we talk about stock specific, then I have one selected stock, and now it's from pharma sectors. Biocon, I think Biocon is doing something better than the other stocks right now. Biocon is trading above its 50 days moving average at 348 level. Not only this, Biocon has also taken the support of its 200 days moving average. It has been trading above its it has been trading along with its of a rising trend line. So we may see some good upside momentum in the counter. One can get into the stock at present level at 348 with strict stop loss somewhere around 330. First target that we can see it's a 361, and if stock breaks this 361, then further upside would be there up to the level of 383. It means somewhere around 10 to 11 percentage of momentum that we can see in the counter. So yes, Biocon looks very attractive with strict SL of 330.
Okay. Auto space for you, Kunal, 0.7% higher for the index itself. Bajaj Auto, Tata Motors, these are the ones that are soaring higher. Where would you keep your attention within the auto pack today?
Throughout, we are seeing a good upside momentum, particularly in auto sectors. If we talk about Auto, it's up by 2%. Hero Motor, it's up by half in percentage. TVS Motor and ISA Motors all are doing good. But definitely, I'll keep an eye on Tata Motors because Tata Motors Tata Motors has from bullish engulfing formations. It has been trading above its range bound momentum, in which it was trading for almost for more than 3 days. It also has taken the support of its previous bottom on a weekly chart. All the equation goes in favor for creating a bullish momentum only in the counter. One can get into the stock at 748 with strict stop loss somewhere around 750. No doubt SL is at bigger level because of higher volatility, but yeah, we can see a good upside momentum as well. First target is 762, and if stock breaks this 762, that further upside would be there up to the level of 820. So Tata Motors looks very attractive, particularly on a daily chart amongst other auto counters.
Okay, got that. So that's as far as the auto focus is concerned. SQ's Kubota is also buzzing higher in the FNO action right now. That's another one that you should keep an eye out on from the auto space. But Dixon Technologies, what's your sense here? Should one continue to keep an attention even at the current levels and after the surge that we've already seen in 2024 for Dixon Tech, Kunal? How are the charts really looking to you?
Now, two things are there. If you have already positioned that holy stock, and if you want to enter at present level, then definitely one can enter at present level. Right now, stock is trading at 18,538. Downside strong support comes at 17,600. So stocks looks very attractive, particularly in this at present level. If you talk about target size, then first target comes at 19,400, and if stock breaks this 19,400, then one way upside would be there up to the level of 20,700. It means again we can expect somewhere around 11 to 12% of momentum in the counter. So these stocks looks very attractive for creating a long position at present level.
Okay, got that. So that's the view that's coming in. Broader markets again. Gensol Engineering is pulling up higher, 8% higher. Tips Films, this stock has actually given handsome returns in 2024 thus far. Another 8% of an uptick for this one again. You also have Go Digit General Insurance that's buzzing. Remember, we've been discussing the insurance theme, which we will also continue to discuss today with Kunal as well. Apart from this, hotel space is buzzing. The hospitality space. Remember the year-end travel. It's up and about. You have, chalet hotels that's up by 4% odd. You have other hotel stocks that are also buzzing in trade. Blue Coast Hotels, for instance, is also up and about in trade. So those are the pockets that are buzzing. But let's get started with first Tips Films for you, 9.7% higher. There is no stopping this counter. What is the kind of move that you expect from here on? For those who have missed the kind of rally that Tips Films had displayed over the last 6 months odd, what is your suggestion?
Well, my suggestion is for this counter to wait because no doubt counter is trading with 12% of gaining momentum, and it is trying to give a breakout of its 680, 690 level. But that is sustained above this 680, 690. No doubt stock has been trading above its 200 days moving average. Not only this stock is also trying to give a breakout of its downward falling trend line. But at present level, I think one should wait to sustain this counter above 690 level. Then only one should go for creating a fresh position. Afterwards, we can see upside momentum up to the level of 760. And if stock breaks this 760, then further upside would be there up to the level of 920. So no doubt this stock looks very attractive on daily chart, but one should wait for confirmation above 690 level.
Okay, got that. So that's the view that's coming in on this one. Insurance basket for you now, Kunal. This is another space that we've been consistently discussing. Life insurance majors have been buzzing. Today it's Go Digit that is buzzing as well. What is your entire approach on this space? A lot of regulatory actions are taking place. Life insurance companies could soon be allowed to sell health insurance. That is in the works, and that probably will become a reality. Which are the companies that you believe are likely to benefit from all these regulatory changes?
Well, let's talk on the Go Digit first. Right now, the way Go Digit has been trading, I think further upside would be in the counter.
Hmm.
Right now, counter is trading at 333 level. Stock has a strong support somewhere around 310 level. Even before stock took the support of the same, and afterward it went up to the level of 400 level. So at present level, stock looks very attractive, and as you mentioned that stock is waiting for some regulatory approval, and if it happens, then we can see one way upside momentum in the count up to the level of 400 and more about it. So this is the perfect time where one can get into the stock with strict stop loss somewhere around 310. First target for trading perspective, we can see at level of 360, and if stock breaks this 360, then further upside would be there up to the level of 400.
Hmm. Okay, got that. So that's the view that's coming in. Another space that I wanted to discuss with you again is one of the buzzing spaces of this year, and that is the capital markets related spaces. We've seen how BSE, CAMS, CDSL, these stocks have outperformed. It's largely been K FinTech over the last 1 month that has further played catch up in this theme. What is your approach towards this space? Are there any stocks that you believe can continue to take the benefit in the new year within the capital market space?
Well, if you talk about capital market space, then but obviously BSE looks very attractive. Not only this, if we pull out the chart of MCX, even it looks very attractive on a daily chart. Right now, MCX is trading at 6,422
Yeah.
levels, somewhere around taking the support of its 50 days moving average. One can go for creating a long position present level with strict SL somewhere around 6,200. Right now, stock is trading at 6,400. First target that we can see the counter is 6,500, and the stock breaks this 6,500. Then further upside would be there up to the level of 6,800. So definitely MCX looks very attractive. Even if we pull out the chart of BSE looks very attractive on a daily chart. Right now BSE is trading at 5,450 level. Downside support comes at 5,350. And if stock sustain above 5,500, then one can go for creating a long position with strict SL of 5,350.
Okay, got that. Let's do some stock spotting then. Trent is now picking up pace within the Nifty stocks. Now look at Trent at this point in time, 2.2% higher at 7217 right now on Trent. After a little bit of lying low and sideways consolidation, the stock has again started to move. It was trading just a few days back below 7,000 mark, and it has been consistently moving up. Why Trent is important to discuss? It's important to discuss this stock within the Nifty because this is the only Nifty stock which in 2024 has doubled investors' wealth. Trent has given a 140% return to investors in 2024. Now remains to be seen whether it still looks attractive beyond that 140% surge for the new year, that's 2025 as well. Rarely do we see, Kunal, that 2 consecutive years will prove to be substantially good years for one Nifty stock. Trent was the stock for this year for sure. But what is your suggestion right now for those who have missed this rally of 140% for Trent in this year so far? What would you advise?
Well, right now trend is trading at 7,212 level, and it has been trading about 50 days moving average. And the way stock has been trading on a monthly and weekly chart, I think this stock may further post some good return, particularly for retail investors. Right now, stock is trading at 7,212 level. One should get into the stock at present level with strict stop loss somewhere around 6,900. First target we can see the counter is at 7,450 level, and if stock breaks this 7,450, then further upside would be there up to the level of 8,000. So yes, I think we may see good upside momentum in the counter. One should get at present level.
Okay, got that. So that's the view coming in on Trent then. Auto space is now in top gear, 1.4% higher for auto space. Bajaj Auto up 2.2%, 9,090. It could soon change a digit, and you could soon see 5 digits coming back on this one. And therefore, you have Tata Motors that is up at 1.8% higher at 754 odd levels. You also have Eicher Motors that's nearly up 2% again. You have Bharat Forge, Hero Moto, M&M, TVS Motors, and even the ancillaries like maybe the tire stocks. And you could also see you know, Balkrishna Industries, Samvardhan, these Exide, MRF, Bosch, Apollo Tires, these are the kind of stocks that are also buzzing in trade. So if I have to ask you, Kunal, you know, auto versus the auto ancillaries, what is looking good at this point in time?
Well, I think auto looks very attractive, particularly on at present level, because if you see, Tata Motors means if you look at the Bajaj Auto, Tata Motors, Eicher Motors, they all have, they all had witnessed decent fall from its all-time high, and right now they all are covering from their recent bottom. So I think we may see good upside momentum in this counter because of its recent correction. So one can go for creating a long position, particularly Tata Motors. We have already discussed this counter: Tata Motors, Bajaj Auto, Eicher Motors, Maruti. These all the stocks are looks very attractive, and I think this is the time where one can go for creating their one can go for rebalancing their portfolio with these stocks, because all the stocks has been trading. I think we may see somewhere around 15 to 18% of return in Maruti. All the stocks are looks very attractive, particularly on daily time frame and weekly time frames.
Okay, 9:30, ladies and gentlemen, and we have the first 15 minutes of candle being formed right there. Kunal, it's further picked up pace, 23,840 now, 90 points higher on the Nifty. Does it give you the confidence that we could have a positive start to the series?
Well, definitely, no doubt, stock Nifty is up by 100%, and we may see a further upside momentum in the Nifty up to the level of 24,100. But major momentum we will witness after this 24,100. And but obviously, in recent days, means we are seeing a high implied volatility, particularly in the Nifty. So if anyone has a long position, particularly in the Nifty, please hold this long position up to the level of 24,100 with strict stop loss somewhere around the 23,750. And Nifty's lot size has also changed for the weekly expiry. So one has to maintain higher margin for to maintain with the weekly expiry, and Nifty's lot size is going to change for February expiry. So margin will be like higher, and think this will help to curb the volatility as well. So if anyone has a position, particularly in the Nifty, please hold this with strict stop loss somewhere around 23,750 for a target of 24,100.
Okay, got that. So that's as far as the Nifty is concerned. What is slipping lower is the IT pack, viewers. About 0.2% of a decline for this one. Oil and gas and realty have also slipped into the red. Some of the PSU stocks have also now slipped. So IRFC, IOL, Indian Oil, sorry, and BHEL, BEL, BPCL, Coal India. These are the kind of stocks that have slipped lower. On the Nifty also, when we do see IT stocks like TCS, HCL Tech, both have slipped. You have Adani Ports, which was rallying yesterday by over 5% odd. That slipped. L&T, ONGC, ITC, Wipro. These are the pockets that have actually slipped lower in trade. So the IT pack is at least falling back in trade. Okay, for the IT space, Kunal, what is your approach right now? Should one continue to stick with mid caps, which has outperformed even now?
Well, I think one should wait for IT counters, because we have no doubt we have seen a good upside momentum. We have seen a good returns, particularly in the IT sectors. But right now, all the IT stocks have been trading in a range bound momentum only, and I am not getting enough confidence as of now. So please avoid these IT counters for the time being, and one should particularly focus on the auto sectors and the defense sectors.
Got it. Okay. Some more stocks that are taking an entry in the top movers as far as the broader markets and the Nifty 500 names are concerned. You have Traxon Technologies, that's up nearly 5%. Then you have stocks like Shakti Pumps, again after yesterday's strong move, is up at 5%. Then you also have stocks like Transformers and Rectifiers, 5% higher for this one too. You have Bharat Rasayan, that's up by 4.7%. I'm taking all these names because they are newer entrants from various sectors, although. Then you also have Orient Technologies, that's also up and about around 5 odd percent higher for this one as well. Finolex Industries has moved up. That's up by almost 9% now. That's also buzzing sharply. Vatek Wabag, that's another one that's 6% higher in trade. These are the newer names that are taking an entry in the sharper moves being seen. What looks good to you in the Nifty 500 basket, Kunal, right now?
Well, if you talk about 500 stocks, then one stock is there. No doubt we have already discussed about Biocon, but again, it's from pharma itself. It's Dr. Reddy right now. Dr. Reddy is trading at a good level. If you talk about the daily chart, right now stock is trading somewhere around 1375 level. It is going to breakout of its flag formation, and flag formation is bullish continuous momentum indicators. So one can get into the stock at 1375 level with strict stop loss somewhere around 1330. First target we can see in the counter is 1430, and if stock breaks this 1430, then further upside will be there up to the level of 1500. So this stock looks very attractive on daily chart. We can see a good upside momentum in the counter.
Okay, looks good on the charts right now. Keep an eye out on the healthcare pack as well with those names that Kunal has just taken. Apart from this, let's also pull up some other pockets where we can discuss more stock ideas from with Kunal right there. Cement space we've discussed, it's fully buzzing in trade. The textile space, okay, we can discuss this as well with you. Kunal, textile space was getting in the thick zone because there was this Bangladesh plus one kind of a benefit that was pouring in. Anything that looks attractive to you even now? We've been seeing many stocks in the recent past buzz beyond even Raymond. We've seen several other smaller stocks also. Gokul Das Exports is one. There are many such others that have been moving. What looks good to you within the textile space?
Well, if you look at the textile pace, then Arvind looks very attractive right now. Arvind is trading at 405 level, and the way stock has been trading on a daily chart, we may see further upside momentum, particularly in the counter. Stock has been trading above its 200 days moving average. It also been trading above its 50 days moving average. Means one can say long term trend is up for the counter, and right now stock is trading 402 level. Any fall up to the level of 395, I think one can get into the stock with accumulation position. Downside strong support comes at 380. First target we can see the counter is at 450, and stock breaks this 450. Then further upside would be there up to the level of 480. So amongst this textile space, Arvind looks very attractive.
Okay, got that. So that's the view that's coming in on the textile pack for you viewers. Let's again look at some of the other buzzing pockets. Pharma has already been discussed with Kunal. He's picked out at least 2 to 3 stocks that you can definitely focus on this space. Autos we have discussed. Banks now. Kunal, we haven't touched upon this one. Within the banking space, private versus PSU theme is again being discussed widely now. Where do you think the action can continue, and where should investors' focus be? We've seen large private banks like HDFC pull up towards its record high levels after a long haul. That's also keeping ICICI Bank, Kotak, Axis Bank, IndusInd now coming back into flavor. But PSUs are also making a comeback. Stocks like SBI, PNB, and even the second-rung PSU banks like Union Bank, for instance, Bank of Maharashtra. Where would you keep your focus if you have to freshly invest in the banking space?
Well, if we talk about a particular bank, then Kotak Bank look very attractive, particularly on a daily chart. The way stock has been trading, I think we may see a further upside momentum. Right now, Kotak Bank is trading somewhere around 1757, up by only 0.13%. Marginally, it's up by. We can see first target at 1800, and if stock breaks this 1800, and further upside would be there up to the level of 1825. So no doubt since last 2 to 3 months, we have been seeing some lagging momentum, but nothing to worry about these counters. One can get into the stock in Kotak Bank at present level with strict stop loss somewhere around 1730. And another stock from the private bank, it's HDFC Bank. HDFC Bank is trading at 1795. Stock has already given a breakout of its all-time high level, and it has been trading in a comfortable zone as well. So one can get into the stock at present level for an upside momentum up to the level of 1860 to 1900 level.
Okay, got that. So that's the view that's coming in on the banking space as well. What else is buzzing in trade? Let's look at some of the other pockets. I think the small caps are showing some strength. So let's look at the top movers here. Remember, we've discussed Go Digit, which Kunal has also shared his view on. Apart from this, Five Star Business Finance, Zensar Tech, Glenmark Pharma, Titagarh Rail. It's all from various sectors that all these names are coming in. Affle, Ircon, CAMS, Angel One, various sectors that is showing us no trend particularly that I can pick out for all our viewers right there. Let's look at the mid caps then to really see if there is any key trend that you can pick up. So Jubilant we've discussed. Biocon has been picked out by Kunal right there. You have Bharti Hexacom and Hindustan Zinc, Yes Bank. Again, various stocks from various sectors actually pulling up within the mid-cap basket as well. Okay, let's actually pull up the railways theme for you now. Kunal, we discussed the defense. Railways is also now slowly and gradually improving from the 3 months of a consolidation phase. Many stocks within this space are continuously, slowly and gradually moving up. Stocks like IRFC, stocks like within the wagon makers, Titagarh Rail and Jupiter Wagons, maybe even Ircon International. How are you looking at the railway story unfold now?
Well, since last few weeks, we have been witnessing some, bounce back momentum, particularly in the railway counters. If you talk about IRFC or if you talk about Titagarh, Vegan, Ircon, all the stocks have been trading at a very good level. And one stock is there which looks very attractive at present level. It's a Titagarh. Not only Titagarh but Ircon even looks very attractive at present level. Right now, Ircon is trading somewhere around 210 level, and we can see good upside momentum. The Ircon up to the level of 240 to 260. So one can get into the stock at in Ircon at present level with strict stop loss somewhere around 180. If you talk about Titagarh Vegan, even Titagarh Vegan looks very attractive. It's up by 2%, trading at 1195. Further upside would be there in the counter up to the level of 1260 to 1320, which strict stop loss somewhere around 1140. So definitely all the railway stocks looks very attractive, but amongst these railway stocks, Ircon and Titagarh may do some better for our retail traders.
Okay, got that. So that's the view that's coming in as far as the real story is also concerned. Let us also pull up some of the other pockets now for Kunal to really comment on. Dr. Reddy's, as Kunal was saying, is further picking up momentum, now 1.9% higher. We'll keep an eye out on that within the Nifty. Apart from this, within the healthcare pack and the FNO space, Abbott India is also picking up pace, now 2.5% higher for this one as well. Canfin Homes is also doing well within this, NBFC space. Financial services as an index itself is up by 0.5%. We discussed the banking story with you. How about the NBFC space now, Kunal? Where are you keeping your focus in the NBFC space? Is it the housing finance names that is taking preference at this point in time?
Well, if you talk about NBFC space, not only housing finance, but if you talk about the overall financial service, then Bajaj, LIC, HDFC, all the stocks all the stocks are doing very good at present level. But yes, one stock is there which looks very attractive, particularly on a daily charge. Bajaj Finance right now Bajaj Finance is trading at 600 900 level. Stock has taken the already stock has taken multiple support at 660 level, and stock is trading at 6959 level. One can get into the stock at present level with strict assets somewhere around 6790. First target we can see it's 7100, and more about 7250 would be there. So among the NBFC stocks, Bajaj Finance looks very attractive on a daily chart.
Okay, got that. There you have it. We're now going to be wrapping up the morning trade. Anything, Kunal, that you want to share as your key stock ideas that one should keep an eye out on for today? Again, the market momentum is further picking up pace. We are above 23,850 now. If this sustains, where should investors keep an eye out on for today?
At present level, I think one should keep an eye on the pharma stocks. We have already discussed Biocon and Dr. Reddy. Both the stocks are doing very attract. Both the stocks are doing very good at present level. But yeah, one stock is there. It's a Zydus Life is trading at 970 level. We may see upside momentum in the counter up to the level of 800, 1000 and 1020. So even one can keep an eye on Zydus Life as well.
Okay, got that. Zydus Life is something that we can keep an eye out on, right, Kunal? Then thank you so much for being with us in the morning edition and sharing with us all the market strategies and the key stocks and sectors to focus on. 23,862, 112 points higher for the Nifty, and it seems to be a positive start for sure. Let's hope that this sustains on the day one of the January series right here. Apart from the secondary markets, remember, there are a lot of primary market stocks that you should be looking at. There will be a stock market debut of Mamta Machinery shares today. So remember, GMP has already been indicating a blockbuster IPO listing for this one. This IPO was opened from 19th to 24th of December. It saw an overwhelming response with a subscription rate of nearly 195 times, and with the upper band now at 243, the stock could actually look at multi-bagger listing as far as the frontline counters in the primary markets are concerned. So that's something that you could be looking at today. There is already an expectation that there could be a substantial listing gain on this one. Premium of over 100% is being seen already. So which means all those lucky ones who got the allotment for this one may be looking at 100% gain on day one for Mamta Machinery today. That's something that you can look at. And the other one is DAM Capital Advisors. This share will also be debuting on the D Street today. For this also, there's a substantial strong gain of 50% over its issue price that is being indicated in the grey market so far. We'll see how it has settled in the pre-open trade to give you a better understanding of what you can expect on this one. At the upper end of the price band, that is 283, there is a 143 GMP or the grey market premium right here. Remember, DAM Capital is one of the fastest growing merchant banks in India with a revenue CAGR of fiscal year 2022 to 2024 with highest profit margin in 2024 fiscal year as well. It's boasted of strong ties with institutional investors, financial sponsors, corporations and family offices as well. And we have already seen that the company also got substantial subscription, and after that there could be again a strong listing gain on this one. Let us see if we already have some indication coming in on the kind of listing debut that you could look at. So for Mamta Machinery, on BSE, the stock price has settled at 600 rupees, which actually means that there could be a 357 rupee or a 146% premium listing for Mamta Machinery. So all those lucky ones could actually be looking at that one. For DAM Capital, it is settled at 392. Over the issue price of 283, which means a 39% premium listing for this one. So keep an eye out on these two stocks in the IPO space right there. We'll wrap it up at that, but do stay tuned on to Business Today Television, as throughout the course of the day, we will get you meaningful conversations around market trends that could shape up the series as well as the new year going forward from here. So stay tuned with us.
So I'd like to understand what were the key highlights of your meeting? What were your key asks?
Well, our key asks have been for MSME sector, the interest subvention scheme, and FM heard it with great interest. We have asked for extra money for under the MAI scheme so that we can carry our MSME exporters abroad and have more buyer-seller meets. It was looked at with interest.
Right. MSME is something that government is pretty much focused on. Even when it comes to trying to extend support from banks, they've been making ways out for MSME sector. Are you content with the current policies surrounding MSMEs from the export perspective?
From the export perspective, see, ours is the largest export promotion council. We have 28% of India's export, and 50% of our export is from the MSME sector. The government is doing a lot, but there's always more to be done. We are pushing for every small little point where we can, like marketing, interest, subvention. They are the few things which we need from the government, and I think we should be able to get something out more.
On this request of interest subvention, was the finance minister positive to you? She shared that she will look into it.
Yes. positively.
Yeah, in the last budget also this was your pending demand, right?
Yeah, our request was also that the cap that is put of 50 lakhs, which was originally 10 crores, be restored to 10 crores. So she's looked at it and she'll consider it.
Okay, it could actually turn around.
Yeah.
Okay, thank you very much, sir, for
Thank
speaking with us.
If you like the video, do like, comment, share and subscribe.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in the series of year-end special editions which we are consistently getting you from this entire week, you are getting to hear from the top stock market investment voices as to what is it that should be on your top radar when you plan your investments for the upcoming new year. Now, this is just the right time when you reflect back on the year gone by in 2024, the things that you did right, the things that you fell short of, and also devise a strategy that would work best for your long-term goals in 2025 as well. Remember, mutual funds, which is at the heart of your personal finance and investment journey, we've actually seen that the industry, after a stellar 2023, also sustained its growth momentum in 2024. An impressive 17 lakh crore surge in assets is what we've seen. That's driven by buoyant stock markets, robust economic growth, and increasing investors' participation as well. In fact, the year 2024 saw a substantial net inflow of over 9 lakh crore rupees and a significant 5.6 crores increase in investors count as well, and a growing popularity of SIPs, which alone contributed 2.4 lakh crore rupees in the industry. Remember, the monthly SIP contributions also consistently surpassed the 25,000 crore rupee mark in October and November, signaling their growing appeal as well. The inflows lifted the industry's assets under management, reaching an all-time high of over 68 lakh crores by November end, marking a 33% growth over 50.7 lakh crore rupees that was registered at the end of 2023. And this is the right time that we should be discussing how should you go about investing in your personal finance journey in the new year 2025, which are the kind of mutual funds that you can actually look at, what are the tweaks that you need to do in your own portfolios as well. Two very special guests who are marquee investors, legendary names in the Indian investment journey that you have been hearing on our channel often as well. We have with us on our show Mr. Feroz Aziz. He's the Deputy CEO, Anand Rathi Wealth. And we also have with us Dhirendra Kumar, the CEO of Value Research, joining right in. Warm welcome to both of you, and thank you so much for taking the time out for this discussion. Let me start off by understanding from you, Dhirendra sir. Let's take that step back and reflect on the year that's gone by, and give us some understanding on the key learnings that as an investor you also picked up that for the year 2025 should be on top of the mind for investors as they get into the new year.
No, one thing is that, something which comes on the forefront is that predictions don't work. There were almost doomsday being predicted at the beginning of the year. Then we had this, the impending election.
Yes.
And everybody was expecting a result, and we got a surprise, or, so-called surprise. Market was shaken, but, eventually it turned out to be far more resilient. If you look at all the key surprises that we got, globally the government started, raising the interest rates. The legitimization of Bitcoin with the launch of an ETF by SEC, or putting, despite these milestones, and that definitely is visible. Bitcoin crossing $100,000 mark. But looking at the Indian market and what Indian investors have experienced, apprehension about small cap and this and that, I think there is a lesson to be taken. That chart your course and just stick around and don't bother about what we are saying.
Okay, got that. So predictions can often go wrong is one thing that you should definitely keep on your top radar.
It could be a distraction,
It could be a distraction, yes. Okay. Feroz, to you, then tell us, what were the key highlights, takeaways for you from the investment journey that investors went through in 2024? Where did we go right and where did we go wrong?
See, I think investor journey, I'm very pleased with the disciplined approach which India has displayed in the year 2024. If you look at the beginning of the year, the SIP amounts, after almost 30 years of the mutual fund industry being privatized, had reached 17,000, 18,000 crores a month. And in just 1 year, we've moved from 18,000 crores to 25,000 crores, which is almost a 50% jump, which is a 15 years ka kaam, ek saal mein hua hai. That's a great thing. That's a great barometer to see whether India is respecting equity, point one, respecting discipline, point two. We were great savers. I think there's an indication that we're moving towards great investing principle as well. The second, on the same note, I think this is the third or fourth year where I'm seeing HNIs going wrong with their market timing horribly. In starting from FY21, where post-COVID, when it was a screaming buy, when Nifty averaged at close to 10,900 on all working days, equity mutual funds, HNI money, left equity mutual funds by to the extent of 20% of the AUM then, which was 6-7 lakh crores. HNIs removed 1.5 lakh crores. So point one I'm making is retail has gone significantly right again, and HNI has got significantly wrong, and the distractions largely have been tremors for not the retail space, like Dhiren sir said, has distracted the HNI more. Lesser the advice, the more the profitable that segment has been. Being a distributor, I'm acknowledging that because I am in the HNI space. So that's one learning. Learn from the retail was the mantra for FY for the calendar year 24. And now looking at the other thing, which is one of the surveys which I did, because something which was perturbing me was not from a mutual fund industry standpoint, but people actually dabbling in derivatives. And to my mind, being on the derivative screen for the last 18 years, people who do derivatives as a part-time job, they don't know option Greeks, delta, vega, gamma, theta, rho. And the second order Greeks also, they don't know, but they still dabble and try to bet against somebody who has done that for a living. So I did a survey in 3 different events, which were retail events. There were only 2 questions asked. Do you do derivatives? And if 100 people said out of the 200 in the room said they do derivatives, the second question to those 100 people, do you also do SIP?
Okay.
72% of them said that they also do SIPs. So this is not a mutually exclusive set like it might be made to believe.
Correct. Absolutely. So those are the key takeaways then. Now, Dinesh, I'll come to you with a forward-looking question now. We have seen a lot of resilience being played out in the equity markets in the first 6-7 months of 2024. No matter that we saw a lot of headwinds, but we came out stronger every time. But in the last 3 months, from October onwards, that resilience is somehow testing investors' patience. Why are the markets not able to come back now is the big question. And this is also for the first time. You did point out, and so did Feroz, all of these investors who've been going strong and big by investing in their money in mutual funds via SIPs are now wondering as well that, will the markets have the strength to continue to give them that kind of a return that we have seen in the last 3-4 years? So what is the outlook, A, on equity markets that you believe? Even if there is a tempered expectation that you believe investors should have, what is the right strategy to continue to invest in equities?
Investors should continue with the same strategy as they have been at it. Last 2-3 years, 4 years, any investor who has come has stuck around with his SIP. And I don't think any domestic investor has been shaken at all. In fact, only the month of October we saw some withdrawal by domestic investors, and I think that is quite natural. In the month of Diwali, people take out a part of their money to spend, and I think that's the wise thing to do. If you're feeling happy about your investments, and I don't think people are getting upset with their SIPs and whatever return they are getting, or they are getting fearful of the height. I think most of the disturbance, or most of the volatility has come from the actions of the international investors investing in India. The foreign portfolio investors, they have their own dynamics, they have their own dimensions, and they have their own triggers. And when they pull out, they are big investors in the domestic market, and when they pull out, there is a degree of a kind of herd mentality. And that drags the market. Despite that, our market has shown the kind of resilience which we have never, it is unprecedented. I think, another thing which was, there is a segment of the domestic market which is buying the trendy fund, the NFO boom. And that is something which I'm wary of. That is where I feel that, there are, some investors trying to bet on something or, buying into such stories. And it is fine to be dabbling into that. But the point is that, 80% of your investment should be with a long-term orientation, should be diversified. That is a free lunch going on, and just have it. That is something, and look at it as a sacred money, which you will not touch based on, just because some money is, there is a drag in the market, or, market has gone down very sharply, because markets will be like this only. They will always go up and they will come down very dramatically in a brief period of time. We saw it last week. And I think that is going to be repeated time and again. It will be a test of your patience. But most investors who have come in the last 3-4 years, they are sitting on such huge profits. Investors have a very different attitude towards their returns. You lose your gains, all of it, you don't mind, but you lose a small part of your principal. So if any investor has been around, his attitude to risk is very different today.
Absolutely. Let me get Firoz also on the same. What mutual fund strategies do you believe should be recommended and investors should focus on then, keeping in mind all of these facts that even Dhiren has alluded to, that the markets could be continuing to be volatile. We have a lot of moving parts here. US, there is going to be the new president taking office. Policies will be changed. There are a lot of stimulus that's taking place in China. So a lot of things will be moving forth here and forth. Of course, inflation, we have our own problems as well domestically. So looking at that, are there going to be changed strategies for 2025, or should one stay the course?
Sakshi, firstly, I don't subscribe to the narrative that Indian markets have been volatile. Okay, numerically, on an Excel sheet. Okay, in perception, though, in English, we can describe Indian markets to be volatile, but in mathematics, no. On 22nd March 2020, okay, little over 4 years back, there was a circular which came in India a day before your lockdown, that there is going to be a limitation on the amount of shorting a person can do, which is selling a commodity before owning it. Is called shorting. Like if you want to sell a house, before you sell the house, you have to buy it, right? But in equity markets, it is possible for you to sell a share before buying it. That's called short selling. That was limited on 22nd March 2020. For a 500 crore notional amount, which is almost a piddly amount if you do in the options market. That circular is still live. It's been a long period. After that day, our market, represented as Nifty, is lower volatility than S&P 500. Nifty has 50 stocks, S&P 500 has 500 stocks.
Right.
And S&P 500 represents 50% of the world's market cap. That's volatility is more, 18.59. Nifty's volatility from that date till 30th November, which is the latest data I have, is 18. So Indian markets have been resilient. I'm just giving numbers to what Dhiren sir said. They have this circular has a very large role to play. 1st April 2025, SEBI has tightened this circular further instead of withdrawing it. And I think that's the biggest gift which SEBI has given to investors, making it a non-speculative, more investor-friendly and lesser trader-friendly market. Okay. So much so that options market in India defy the only Nobel Prize winning formula week after week, which is called the Black-Scholes pricing model. So they're not volatile. Secondly, coming to your pointed question, sorry to digress, but I think this is very little spoken about, even in mainstream media on market shows. But I think it required attention of your viewers, at least in the year 2025. Now coming to the mutual fund strategies, I would say look at the market cap driven classification. A focused fund, mid cap fund, small cap, large and mid cap, and a multi cap could be a good mix of categories which you can focus out of the several which are there.
Okay, we'll come down to that and maybe focus a little bit on all of those that you have pointed out. But let me get Dhiren sir also on this. Dhiren sir, you pointed out to a very important fact. This rush of NFOs that we have seen that usually distract a lot of investors. We've often also seen that some of these NFOs are actually launched towards the peak of a theme or a sector really rallying. Case in point, when we talk about the defense NFOs that they started to come in, we had already seen a large part of returns come in onto these defense stocks, and after that it's been plateauing or consolidating a bit. What is it that you would want to advise when investors look at these sectoral thematic funds in 2025? Do you think some of them will do better? Is it better to continue to stay focused with what Firoz said, a multi-allocation fund? Maybe large, mid and focused funds is something that we should look at. What is your own suggestion?
My suggestion is that investors will not be deprived of anything if they completely ignore the sectoral and thematic, funds.
Okay.
Investors should understand that this is, mutual fund is a consumer product, and consumer product often are sold based on a story. This is the magic that will do to you, whether you buy a, cosmetic or, and on that front, and I think it is fine for investors to be investing in them. Naive, beginners, they will do it, and it is fine in the sense that investors have, my understanding over the last 20-30 years is that people don't learn from history. They have to lose their own money, and they should lose it as early as possible, get that experience, and either get out of the market forever or experience it and understand that how it works. Because if you are not willing to understand how it works, it's your money, you better worry about it. This is not the first time. It happened in 90s. It happened in the technology boom. It happened in the infrastructure boom, in 2007. It has happened recently in 4 or 5 such things. There are such narrow segments of the market in which these, investors are getting a different excuse. Now SEBI has a clampdown on the number of categories or number of funds you can have in a specific category. Now every fund company has found a excuse. They are asking the index producers to create a specific index for them, and they are launching one. I find it very humorous. But there's a conflict of interest. Here is a company which or here is a business which makes money only by raising money. But you as an investor make money only if it grows from here. And when you are tempted to buy a story, it is generally at its peak. Odds are against you. I think there is nothing like, there are segments of the market which we are deprived of. I would like every investor to be investing in the international market, but they can't. And I would not suggest them to invest in any other manner beyond mutual fund, because that is the safest, well-regulated, and the simplest way in which you can invest. And that is the window which is coming to an end. I'm very scared and I'm very fearful of what is going on in the market. Most international ETFs which are listed and traded in the market are trading at premium of anywhere between 10 to 30%. Now anybody who buys it he's very likely to lose, and he is guaranteed to lose if tomorrow is Reserve Bank permits investing abroad again by because right now there is a ceiling of $7 billion per for the whole industry, $1 billion per company, and $1 billion for ETFs, of which one company there is a ceiling of $300 million. That has been that ceiling has been hit, and funds are not permitted to invest there. If that is opened up, every investor who is investing in the market based on the momentum that they are witnessing right now will be losing money. Be wary of it. I agree with Firoz that right now it is time to be investing in multi-cap funds, and multi-cap as compared to flexi-cap are becoming more attractive because they are forced, because most multi-caps they became almost large cap funds simply because all these fund managers, they tell you that they're multi-cap, but as they have raised, they have got so much more money that most multi-caps have become 90% large cap funds. And 90% large cap fund doesn't make, a flexi cap fund investing 90% of its money in large cap doesn't make sense. Because you get the Nifty at 10 basis point, and the likelihood of a fund manager or the number of fund managers who are beating the large cap index, that number is shrinking. There are few of them who are doing it. They can justify their fee. So I would say that, look for a multi-cap fund, keep it narrow for your long-term money. Make sure that you are not investing your short-term money in equity. And if you are able to completely, give a pass to all the sectoral and thematic fund, which will be clamoring for your attention and money, ignore them.
Okay, interesting point right there. Firoz, I'll bring you in on that front too. One, on if you could continue to give your views on the geographical diversification as well, something that Dhiren sir alluded to. And apart from that, the top schemes that you believe within these categories that you've named that you can share with us.
Actually, I'll just like to put some numbers to Dhiren sir's worry on the NFO.
Yeah.
If you look at even if you look at this financial year, which is only 9 months till December, we have already launched 143 NFOs. Last year, full financial year, I'm speaking financial year, 107. Previous year, it was 80. In FY17, there were only 7. Like Dhiren sir said, everybody had a bouquet permitted by SEBI ki itni schemes aap rakh sakte.
Correct.
Once the bouquet got over, you're still wanting to raise money, so you're forcing yourself to come up with themes and create indices, and then you're taking smart beta or whatever conventional, unconventional, open canvas. Basically, someday you can always have a theme saying, I'll only buy companies which start with alphabet A, right? That is also a theme for that matter. Then there's no limit. Sky is the limit in terms of this. So NFOs were scary. But one number which gave me some calmness is I looked at the top 3 AMCs and said that if I as an investor bought every NFO ever launched by this AMC, would I beat Nifty? You'll be surprised. If I look at HDFC as case in point, if I bought every NFO they launched, I put, let's assume, 5,000 rupees in all of them, I would have beaten Nifty by 6.39% per annum.
Okay.
Okay, which gave me some santwana that some of the large AMCs are timing them not at the peak, but some of them are timing at the trough. Like you spoke of defense, HDFC. So that's one. Now coming to the schemes, which are very important for me to read out for the viewer. ICICI Focus Equity, Kotak Emerging Equity, Invesco India Small Cap, DSP Equity Opportunities, and SBI Contra or Kotak Multicap. One of these two. So 5 schemes from 6 different categories you can choose.
Okay, there you have it. Those 5 names will be up for you, all of you to see, and you can definitely look at investing in them in the year 2025. Dhiren sir, how would you really recommend on this front? How should one go about investing in particular schemes?
I would say that, choose the dull and boring way of investing in mutual fund, which is, go for the timeless fund. And today, my timeless selection will only include, multi-cap fund. And, if you have 1 or 2 or 3, that is good enough. And if at all, or you can create a portfolio of, just 1 or 2 index fund and supplement it with small cap fund or mid cap fund. 1 or 2 of them, and that will be good enough. 4 funds for an investor, which is 2 index and 1 small cap and mid cap. I think, and look for all those, create a checklist of things that a fund must have before you invest. And that's about it. 4 of them will do the, expect, the only way you can be happy with a mutual fund is, have a reasonable expectation from here on.
Okay, reasonable expectations is something that you should have. But what about equity versus debt, Dhiren sir? How are you really looking at that aspect play out in 2025?
No, I think, equity versus debt is not something for an investor to do. Your short-term money should always be in fixed income, whether it be lying in your bank or something. And if you're trying to benefit from a rate cut, I think most fund managers over the last 10 years on 3-4 such key occasions when they got excited about it, they lost money and they lost investors' money. So I would say don't try and guess what RBI will do, what the government will do, what other investors will do. Focus on what you need.
Okay, interesting point. Firoz, what about you? Equity, debt, passive funds, how are you really going to be playing out all of that?
I would say that debt, I would not play long-term debt saying interest rates will be reduced and you will make money. That's a wrong narrative. Because when the repo rate went up from 4% to 6.5%, the 10-year GSEC has not moved up. In fact, it has moved down. Okay, so when you didn't lose money when the repo went up, why are people expecting to gain money when the repo comes down? Okay, if you look at 9 months back, the repo rate was 7.3. Now it is 6.88. Well, the repo rate was 6.5. Repo has been 6.5. But 10-year GSEC has come down. So you making money out of the long-term debt is a wrong narrative because bond portfolios have not had a mark-to-market loss even in the steepest rise of repo we have seen post-COVID. So that's completely subscribed to Dhiren sir's view. Coming to the equity side, I personally, again, subscribe to what he said. If you have 5-year plus monies, if you don't have 80% in equity, you are wasting time. Because you're not in a high inflationary economy like ours, where there is compulsory investments in debt, people are overexposed to debt. If Indian household savings only have 6.7% in equity from a financial services pool and 90% is in debt. So I think buying debt or me propagating debt would be a wrong philosophy, because Indians are overexposed to gold, debt, real estate. Equity is something which they have stayed away for generations. Because of the wrong expectations, like rightly highlighted by sir.
Right. Firoz, lastly, I also wanted to bring in something that Dhiren sir was also alluding to earlier. He talked about Bitcoin and crypto. I wanted to also ask you on the bullion aspect, gold, silver. It's definitely outperformed. How is that likely to play out? Should there be a clear, allocation to gold and silver in 2025? And should one also look at an exposure to crypto, looking at how the mother market US is favoring newer policies within this aspect?
Yes, I think, I would say gold, people only buy, they never sell.
Yeah.
Real estate, they sell in 10, 12 years. That's the average. I've done a survey of HNIs who own 2 lakh crores. Okay, so real estate, they sell in 15 years. Gold, they never sell. They say, itne bure din nahi aaye ki main apne ghar ka sona bechunga. So whenever it comes to bullion price, they only look at price from a purchase standpoint. When they look at equity price, they only look at price when it is selling time. Okay, so point I'm trying to get to is, if an investor in 2025 can pledge that, whenever I will look at equity, I promise to review real estate and gold too. The frequency of review for all assets have to be equal. Then all assets, you are giving them a fair chance to work for you. Equity आपको 1 महीने में रिव्यू करना है, गोल्ड 20 साल में करना है, एक रियल एस्टेट 10 साल में रिव्यू करना है. Keep the frequency of review identical. Now coming to your pointed question of gold, I would say gold is going to be an asset which is a great debt replacement, and it will remain so. It can never replace equity because it has delivered only 9.3% return over the long term, that too in rupee terms, in spite of the rupee depreciation supporting the gold values.
Okay, got that. We will thank you then, Firoz and Dhiren sir, for those wonderful insights that you've shared with all our viewers. Time is short, but this discussion could have just gone on and on. It's an interesting one, but we promise to get both of you back into the new year so that you can guide our viewers further on from what we've shared at this in this special show as well. Season's greetings yet again to both you and Dhiren sir for sharing such wonderful insights. May this new year come up to be a very strong personal, professional front on all walks of life. It turns out to be the best one for you thus far. Thank you so much. All right, viewers, we'll wrap it up at that. Do stay tuned on to Business Today, as we will continue to get you such fascinating insights and conversations from the top-notch investors in India to help you, guide you through the new year and the strategies that you should be adopting. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is yet another year-end special interaction that we're going to be having with a top market master for all of our viewers on this new year and year-end specials. Remember, the Indian equity markets so far in 2024 have had shown a lot of resilience for a major part. We've faced so much, navigated through a lot of challenges, be it higher inflation, weaker than expected earnings, general election outcomes, the FIR outflows, and geopolitical uncertainty, and much, much more. Despite that, we are actually sitting at a 9% uptick for the year so far as the benchmarks are concerned. Broader markets like mid caps and small caps have given about 24% return for this year so far as well. So what we're going to be doing is speaking to a market master to help you understand the key learnings from 2024 and what is it that you should be approaching the new year with as well. Let us welcome Mr. Gautam Shah, founder of Goldilocks Premium Research, on this special edition. Warm welcome to you, Gautam, and thank you so much for taking the time out. Season's greetings to you. May the Christmas cheer spread far and wide across your personal and professional lives for you, for your team members and family members at large too. At this point in time, I just want to first begin by understanding from you, what is it that you have learned from 2024 as an investor, and what is it that you want a large part of our viewers to take as a lesson for 2025 too?